What is up, everyone? Nick here. Well, we've had turmoil raging through NIO's valuations, with short-term investors running for the doors and long-term investors actually securing positions for long-term gains. I saw a lot of you on our Discord page going in under the 45 mark. Now, I had been trying to live stream the earnings call, but my camera decided to glitch out. F's in the chat, please. But here we go. I want to give my full thoughts on NIO's future, their current valuations, what's happening to their share price, their earnings report, and everything you need to know coming out of their earnings call last night and their business trajectory. We're going to discuss the good, the bad, and the ugly. I'm not going to sugarcoat anything. We have a ton to get to in today's episode, but before we get it, Webull is giving out 2 free stocks worth up to $1,850 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. They are a 0% commissions trading platform, offers some of the best analytics in the game, and you can trade before and after hours. This is crucial. Check out our Patreon page. We have more content behind the scenes, under the radar stocks. I'm going to be releasing every single one of my trades moving throughout 2021. I finished 2020 with over a 50% ROI, and I think I can do the same this year. This also gains you access into our private Discord channel. This is where you can see all of my real-time trades, track our portfolios, and the chat is always full of good knowledge and up-and-coming stocks. And you know what? Most importantly, I'd really appreciate it. Anyways, gang, let's get right into it. We have a ton to cover. Alright, so at time of filming, NIO is down around 13%, sitting around 43. It's clear something's happening. Let's get right into it. This is really no surprise here. When a startup company in an emerging space misses analysts' targets, there will undoubtedly be a mass sell-off. And this was quite steep, I'm not gonna lie. This is a continuation of their continued slide from highs of just south of $67 a share. Now, I do think the majority of this is based on their actual EPS of negative 14 cents off their target of 7-cent loss. This is a relatively large delta, and I think it scared investors into selling. Now, there's a few things here I want to touch on right off the top. First, let's look at the conversion between USD and renminbi. With the weakness showing in the dollar in relation, this has actually pulled the USD EPS to lower figures. Next, we have a substantial increase QOQ of R&D. We need to remember that NIO is a startup company, and with any startup company, especially one rapidly expanding, moving into new markets, designing new products, and pouring into autonomous driving technologies, there is going to be an increase in R&D. I should also note that I do not by any means think this is going to be mitigated in the coming quarters. I think we'll actually see a few more quarters of rapidly increasing R&D. We do know they are planning on a European Oslo, Norway rollout in the latter half of 2021. This will escalate development costs. This is more showrooms, NIO houses, swapping infrastructure. When investing in a startup, especially one with such high overhead, this should be expected. I'll be honest, their R&D actually surpassed what I had factored in. However, this is a good lesson moving forward. We need to constantly adapt and change our expectations when investing, and this is one of these cases. However, on the earnings as a whole, I'm actually bullish. I know some of you may disagree with my sentiments on this, but I do like this report, and there are some big takeaways to be had here. It's important to remember they for the first time generated revenues of over $1 billion USD in a single quarter. They grew their cash position to $6.5 billion. They grew their vehicle and gross margins to both 17.2%. Huge increases QOQ and YOY. When looking at the conglomerate total of the earnings report, it's positive in my opinion. Yes, of course, I would have liked to have seen their EPS stronger. However, I do think they are growing in a positive direction overall. Now, I do think a lot comes down to next quarter's earnings. I think we'll really get to see the overall direction of their company then. Now, on the topic of forward movement, I want to break down everything coming out of their earnings call. Looking at this call, it was actually quite atypical. They touched on a ton of key investor questions, and there are 5 overarching themes that were discussed here, and I'll break them all down. Alright, so one of the biggest issues for me moving forward is supply chain constraints. This has been an ongoing issue for NIO and their partners at JAC Motors throughout virtually all of 2020 and seeping into 2021. However, it's not just NIO, this is virtually affecting every single EV company. There is a global chip shortage, which could be a massive problem for EV companies moving forward, and this essentially puts a ceiling onto what EV companies can deliver for the time being. Unrelated, I do think chip companies will increase in value. I will have a video highlighting which ones I think will dominate from this. Alright, back to it. GM has recently revealed that the chips would be a $1 billion profit headwind in 2021. NIO has has also stated that they believe their chip supply is suffice for Q1 and Q2 of this year. However, in the latter half of the year, they may run into issues. I will update you all as soon as I hear anything. Make sure you subscribe. Now, keeping this in mind, this could eventually hurt NIO's monthly production capacity. Now, we did see a dip in February deliveries. However, this was expected. This is a historical occurrence in China due to the low day count of February itself and the Lunar New Year holiday. Nothing to worry about here. I think a lot of people are also selling off from fears of slowing growth, however, haven't factored this in whatsoever. Now, at the current time, NIO is able to produce 7,500 units per month, so don't expect huge delivery increases on a monthly basis for the majority of 2021. We'll probably hover around there until the end of the year. Now, I would expect these numbers to begin rapidly ramping up in the latter half of the year if chip shortages don't prevent this from happening around November and December. You may have watched my confirmed rumors video. I had speculated that JAC would add a production extension on their facility, and this is indeed coming to fruition. They will expand annual production capacity to 150,000 units under one shift and 300,000 units under two shifts, just as I had previously speculated. This is gearing up for their ET7 launch in Q1 2022. Like I said, this all happens only under the circumstance that global chip supplies don't impact the ceiling. Batteries were also a key topic brought up. NIO management has stated that the take rate of battery as a service has increased and is now at 55% and continuously growing. I think this is fantastic and really is able to set NIO apart from competitors. It's almost like their superpower in that they are able to drastically decrease the barrier to entry point and minimize customers' payments upfront for the largest cost by weight portion of the vehicle, the battery. I do think this is promising news that BAAS is increasing and customers are taking to it. Now, on the topic of batteries, there is also concern that EV battery shortages could affect late 2021 production. NIO is confident they will be able to, at a minimum, hold the 7,500 capacity until at least the end of June, but we'll have to keep a close eye on this as we progress through the year. I will update you all accordingly. Now, a very interesting note was their autonomous driving talks. This has been something I wish investors heard more of in the last few weeks, but alas, here we are. NIO is considering initiating autonomous driving as a service, operating essentially the same as battery as a service, allowing customers to pay monthly fees for software enabling autonomous driving. This is a very novel idea in the EV world, and I really do like it. I think giving choice and flexibility to the consumer in this ultra-competitive environment is a must, and the companies who jump out front with novel ideas will benefit from this. This is just yet another way we are seeing NIO innovate and change the status quo. I do like this overall. We are seeing that high take rate with battery as a service. I wouldn't expect anything less with autonomous driving as a service. Moving on, we finally received at least some insight into their international expansion. I was disappointed this topic was brushed over to the side during their NIO Day event, and I was hoping that they were going to save it for their earnings call. However, their mild vagueness continues. European expansion does seem likely at this point in Oslo, Norway in the latter half of the year. This is promising. However, Li Bin had previously stated to be in all major global markets by around 2025. I'm not sure how feasible this is. On the topic of a US expansion, management stated that this will take, quote, lots of patience. There's obviously a huge quantity of upfront cash to expand NIO. This is all wrapped up into their swapping infrastructure. I think this is both their strength and their weakness. I do indeed think swapping technology is the future of electric vehicles and a revolutionary idea and the best in terms of reducing wait times, increasing swaps, and preserving resale value in vehicles themselves. However, NIO can't rely on third parties for charging like other EV companies can. They essentially have to assume all of the risk in investment and build their own infrastructure with their own capital. Yes, I do know they have partnerships, but they are assuming a ton of risk. They are then able to capitalize on this investment down the road, but it is important to remember that they do have to assume the massive risk and build the extensive infrastructure web before even selling vehicles on a mass scale. I think because of this, until third parties are involved, NIO's international expansion will be molasses slow. But you know what? I don't think this is a huge issue. I would like to see them aggressively expand on their already extensive Chinese infrastructure and harness the market there. I think the international expansion plans were for jumping the gun, so to speak. I think if they focus on their already present dominating market and continue to carve out market share, this will benefit them more than expanding too quickly and having weak infrastructure webs in other markets. Their business model only works if they do have an extensive infrastructure already in place, and as I was talking about in my previous video, once this infrastructure is already up and running is really when they can reap the rewards. We saw other sales increase in proportional value to their total revenues generated, and I think this is only going to increase in the coming years. Like I stated before, I do think the report and the call were bullish on an overall look. I think this did, however, put investors' expectations of NIO back into check and more in line with reality. We need to remember that they are a startup company in one of the fiercest markets that requires a huge amount of continuous investment. No one said the road was going to be easy, but I still do believe in that road. I still do believe that these valuations will be fire sales down the road. I am a long-term investor. I love the long-term trajectory of this company, and I continue to invest. I will have frequent updates. This is going to be a volatile time. Make sure you subscribe. Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. All you have to do is 1, sign up, 2, open an account, and 3, deposit in at least $100 using the link in my description. With this app, you can trade before and after hours trading. There's 0% commission, and they have some of the best analytics in the game. It's a no-brainer in my opinion. Check out our Patreon page. There's more content behind the scenes under the radar stocks, and this also gains you access into our private Discord channels where you can see all of my real-time trades, my portfolios, and tips into stocks that are about to explode. You do not want to miss any of it. Anyways, everyone, I'll see you all in the next video. Take care, happy trading, cheers.